on. The management, Mr. Ashok Gupta, MD at APL Apollo Tubes, is now with us. Mr. Gupta, congratulations on the acquisition. Can you just tell us what does this processing unit adds to your company?
Thank you. Shankara Building Products is a large retailer of building products in South India and is also a significant producer of steel pipes. One of their subsidiaries, which is Taurus Value Steel and Pipes Private Limited, have two manufacturing plants in Telangana. We are buying one of their plants in Hyderabad. This plant has a capacity of around 200,000 tons per annum. It has a galvanizing plant, and it also has sheet galvanizing lines, 2 lines of that, in addition to other facilities. It has significantly large area, around 30 acres. Now, we have a very strong presence in South India, as you're aware of. Currently, we are working on a capacity utilization of between 80 to 85%. And obviously, we want to increase the capacity because we want to maintain our growth rate of 20 to 25% per annum. And this goes in line with our expansion of capacity. We will be increasing our capacity by 200,000 and in the products which are totally relevant to us. Apart from that, we also get a market for theirs. Under the arrangement, they also will be selling around 250,000 tons of our pipes every year. So this gives us a capacity expansion. It also gives us a market. In addition to that, we are short of capacity in galvanized pipes. They have a capacity of galvanized pipe in that plant. That also adds to our special products.
All right. Mr. Gupta, hi, this is Mubina as well joining in the studios. And yes, I want to talk to you about the product portfolio as well that it adds, like you said, galvanized pipes. But just to once again go back to the deal you were alluding to with Shankara, they will be purchasing a fixed volume as well from this plant. Could you just elaborate a little more on that? I mean, is it a fixed number of pipes that they'll be buying? And is there a fixed price as well at which has been decided?
So this particular unit will become ours, and they will become part of our entire production. Shankara will not necessarily buy production of this unit. They will be buying around 250,000 tons of pipes of any of our units. So it's not limited to this unit or that unit. They can buy any of our product, and they will be buying it at our normal pricing. There's no special pricing for that.
Okay, understood. Now let's talk about the galvanized pipes that essentially this plant will be producing. Now, again, it's something that's I think high value added. It's in your value added portfolio. What sort of operating margins, if you could just roughly tell us, that carries vis-a-vis your regular pipes, and also how does this essentially amp up your value added portfolio? How much now would be value added and how much would be regular after the acquisition of this plant?
The ratio per se will not change. Currently, if you see, we are manufacturing around 10,000 tons of galvanized GI pipes per month. This has a capacity of 3,000 tons. To galvanize, our galvanized capacity will go up to around 13,000 tons per month. As it is, we are growing our overall capacity by around 25 to 30%. So it will be in line only. Galvanized pipes give us a EBITDA margin which is 3 to 4% more than our normal margins, average margins. So this is definitely a value-added product. Of the entire production of this unit, around 25 to 30% will be galvanized product. It is not something which is out of the line. It will be almost in line with our entire product range. But yes, our overall value-added production will go up.
Right, Mr. Gupta, thanks so much for taking out time for us. Always good to get perspective, and congratulations on the big acquisition.